Hi there, Serial Trader here. Just want to do an update. So in my last video before Christmas on the major indices here, I was looking for a sell and still looking, but I have made an initial entry just because, at a certain point you need to be a contrarian. The market will not just keep going up in one direction forever, and I think we're getting to that point fairly soon here where we'll have at least a sizable pullback, and then we can assess what it looks like at that point. But just to give some context here, so I'm still looking at this overall move. So we had our three-wave move down into the December 2018 lows. Now it looks like we're doing a very large degree three-wave move up. Okay, so still in the camp here where we're in some sort of larger expanded flat, or perhaps a larger running triangle or running flat. But this looks very much like an initial move up in A, still very much leaning on this being a triangle wave B, and then a move up out of that triangle in a wave C. And the important information of a triangle is it precedes the final move in a larger sequence. So in this case, the C wave up should be the final move, and then we need to get some sort of wave to the downside. And I don't know exactly how that's going to look, but let's just pretend that I'm totally wrong. That's not a triangle at all, and it's just some sort of super bullish 1 2 1 2 1 2 ultra bull count, and we're just in this massive impulse wave to the upside in its early stages. Well, even under that scenario, we still have this 1 2 3 4 5 waves up. We're still in this Elliott channel that I've had drawn here for multiple weeks at this point. Same channel I had drawn in the last video there in late December. So within this channel, we have this nice 1 2 3 4 5 up. Within the fifth, we have a nice extended 1 2 3, looks like a triangle, 4, and now 1 2 3 4 5 up. So 5 within 5 within 5, looking very extended. Now it can always extend a little further, but that's where I kind of lean on some other things as well. So we're bouncing off the top of the channel once again. The wave count looks extremely mature. We know we're coming out of a very high probability triangle thrust, so we know that this move should be terminal, and once complete, lead to a sizable pullback at the very least. But let's just pretend that's all negated. There's no triangle, and we're in this ultra bull count, the multiple 1 2 1 2 1 2 count. Even then, it looks like we have a mature impulse wave up. If you want to be in that super bull camp, it'd be, the first wave up of many to come. You'd still need, okay, at a certain point, and we're getting very close to that point in my estimation, at a certain point you'd still need some sort of corrective pullback, and likely to at least, the previous fourth wave of lower degree there. So let me just drop that down a bit. And then you'd, resume another impulse wave after that. It would be extremely bullish, but it would still require some sort of setback to balance this all out here. So just doing some fib retracements. So from down there to the top. So just a 50% retracement, which actually lines up quite nicely from where we stand with the previous fourth wave of one lower degree. That would still get you down to 3,077, and the wave 4 termination point down there was 3,070, so nice technical confluence there. So from current levels of almost 3,300 down to 3,070 or so, you're looking at a nice over 200 point correction. And this, keep in mind, this is in the extremely bullish scenario where this is just the initial impulse wave up, and we're looking just for a ordinary three-wave pullback to then set up for the next impulse wave. And obviously, if we have a more bearish large degree interpretation, we need a more substantial move down before looking for another move up. But it doesn't really matter. I'm still very much willing to play for a 200 point drop or so, and with a reasonably tight stop in comparison. So I'll just delete the fib retracement. So along with all that I've mentioned, you can lean on some other things here too. So okay, we got overbought. Overbought doesn't mean sell, but I like when you get overbought and then you go on to make new highs, but then you have this bearish divergence, and you know, that's where you make a lower high on RSI, and to a certain degree a lower high on these MACD moving averages, and certainly the MACD histogram. Lower highs there, but higher highs in price. So that's always what you want to see in kind of a topping process. So you got that, and you happen to have that on the 4-hour chart, the 1-hour chart, you know, the daily chart that we were looking at, obviously. Let's see if we got it on the weekly. No, so weekly is just in the overbought condition, but you may not get the weekly bearish divergence. That's certainly a longer term time frame. Sometimes it just shows up on the daily, and then the weekly just starts going down, and you don't get the divergence. But we'll see. Anyway, I'm very much liking this for a sell, and you know, not looking for the end of the world here, but just looking for at least a corrective pullback into the previous fourth wave. So, you know, a good 200-point drop or so from near current levels. And I would propose putting the stop at, let's say, 33.50. Sorry, 33.50. So it's not that far away if you're wrong. And that would be a clear breakout of this channel, which I think is low probability at this point. So basically, trying to make 200 points to the downside, risking 50. Good 4-to-1 ratio. I'll take that kind of setup all day long. And also knowing that just everything's lining up so nicely here. The Elliott count, the diverging technicals and all that. So I have sold, now I haven't done this all at once. I've sold one ES futures contract today in the 3290s. If it pops above 3,300, I'll add to that. Obviously with my stop, we'll call it 33.50. And then upon confirmation of us starting to break down, say we get below the daily T line and volatility starts picking up, I'll add there as well. So right now I just have a little taster starter position. Just thought I'd share that. And again, looking for at least a 200-point correction and possibly more, but we'll have to assess as the price action develops. And for now, there's no sign that it's dropping yet. It just looks tired, looks extended, looks very mature in the count, but it can still grind a little higher. I'm well aware of that. But I want to try and get in before. Now, I'll just go back to an example that kind of reminds me of this. So going from the 2017 into early 2018, you had this massive bullish run, got very extended. It seemed like it could never go down. And then towards, it looks like January 5th is where it peaked on 2018. And then you finally had the correction start. And it was a sizable correction. And I think we could potentially be setting up for a rather rapid shift like that. Just everyone's too positioned at this point in one direction. Too long, too overbought. And when people start panic selling, when this relentless uptrend starts sputtering, you could see quite a domino effect, and that's what gives you that nice move down. It could be very short-lived, but I would expect a very sharp move, and then perhaps a quick snapback rally. But again, we'll assess the price action when it happens. I just thought I'd share that as far as what I'm doing with this. I do think we're very, very ripe here to begin at least starting some bearish positions. Okay, now on the I think there's some candlestick chart. No real signals. We had a doji yesterday. Not a particular signal there. A little bit of an upper shadow, but again, not a outright sell signal. That's on SPX. On the weekly, again, nothing to mention yet, although the week's not over yet. So there's no real clear signals there on the candlesticks. I'll just make that clear. You can maybe wait till there is if you want to have a more high confidence sell signal. But you know, I'm just planning to kind of scale in, just in case that big drop does come out of nowhere. All it takes is a sudden you know, event in the market, and you could be down a couple hundred points before you know it. So that's really what I'm trying to play for here. Okay, so the Dow Jones Industrial Average, same idea, a bit of an upper shadow, but again, new all-time high, intraday and closing. That's certainly not a reversal day. Weekly chart here, same idea, nothing going on there yet as far as sell signals go. NASDAQ composite, let's have a look. NASDAQ, doji day yesterday, doji day today, so certainly potential doji star reversal candles, although again requiring a decline to really enforce that we have some sort of reversal, and that's on the daily chart. Certainly not a strong signal as of yet. Weekly, nothing flashing a signal there either. But there are some other things I'm looking at that aren't candlestick signals. We'll quickly look at the VIX, and you can see even though the market just keeps grinding higher and higher, the VIX seems to be unable to make new lows, so that's a bit of a tell. You often get that reluctance of the VIX to go any lower, even though the market's going higher, before you get a volatility explosion, and obviously that would imply some sort of decline in the market. So what I do want to go to here is the VIX VVIX tool. And let's have a look here. VIX VVIX tool. So what I like here, you have a divergence between VIX and VVIX. So VIX making higher lows, not making new lows. VVIX made lower lows, but now VVIX reversing and getting above this blue moving average, or sorry, red moving average here. I've highlighted this little yellow box. So you got step 1 and 2 of the signal. You got the divergence between VIX and VVIX. You have VVIX getting above its moving average and starting to break out, and this basically implies you know, people piling into VIX options, you know, VIX calls, because this is the implied volatility of VIX options. So that's what they're doing there, and then later on you'll see them piling into SPX options, SPX puts, and then the VIX will start going up afterwards. But so you got step 1, step 2, and then obviously step 3 would be SPX getting below the blue moving average. It's right around it right now. Blue moving average currently around 32.80, so we're not far away. If we do that, we'll get a confirmed sell signal using this tool. But again, we only have step 1 and 2. I certainly like the setup combined with everything else I mentioned. Looks like a sell-off's getting real close here, and that's why I started to make an entry on it, which I plan on adding to, as I mentioned. And okay, that's what I'm seeing here in the overall market. Also, just not that I care too much about news or events, I'm just following the charts, but I do like the fact that this US-China trade deal phase 1 signing, okay, that finally took place. It appears that there won't be much more progress likely until near or after the election, which means that this kind of carrot that's been dangled, seemingly dangled by the news, oh, the trade talks are going well, blah, 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 that kind of pumping and you know, pump up action is likely gone now. So it could be kind of a sell the news event. We've certainly seen that kind of thing before. You build up, build up, build up, anticipating this amazing deal, and then when it finally comes, whether the deal's good or not, I mean, it's been so pumped that it's kind of anticlimactic, and people start unwinding their long positions, however that plays out. Anyway, just a thought. Don't really care too much about that, but just thought I'd mention it. But yeah, bottom line, looking for at least a 200-point pullback or so, and certainly happy enough if it goes lower, because there will be some nice bearish positions in place for that. So I'll update as things develop. But again, nothing dramatic has happened yet, but definitely looking for it soon. All right, that's good for now. Serial Trader signing off.